Hello everybody, this is Jose here. We're about to start. Let's use this time for a sound check. Everybody please confirm that you hear my voice so we're ready to go. Okay, very nice, perfect. Okay, so we are ready to get started, and today I'm actually going to put myself in the corner of the screen, just for fun. So you get to see me. It would be great that we can find a way that we all see each other, but at least this way you get to see me. So anyway, pleasure to join you on today's Sunday, 17th of November 2019. As you know, my name is Jose Blasco. I'll be your instructor today. Today we're going to spend some time doing some sharpening. So we're going to be looking at what we're doing and just keep polishing those skills. More specifically, I would like to start with an email question from Lisa. I don't know if Lisa is with us. Are you with us, Lisa? It'd be very nice if you're around. An email related to options and standard deviations and strikes and planning for non-directional trades. You guys are so nice to me. Thank you so much, guys. One day we should organize a UFO event all together in some place. It'd be lovely to get together and see each other in person. That would be very nice. But anyway, so we'll start with Lisa's question and we'll go from there. Okay. So get your questions ready. Today we're gonna run a little bit of Q&A. We're going to look at different things. We'll talk about my intention will be to talk about all different markets, the Forex, futures, the options, of course. We can also do something that we never do, which is to look at the markets from a broad, big picture point of view, if you wish, understand what's happening out there. Again, we are back in this territory where recently the market was making all-time high, all these things. So we've received some questions about that, so we can certainly take a look. But again, really what I would like to do is to get technical today into answering your questions. Some of you are doing a great job, I know. I see your emails, guys. You're doing a great job when it comes to putting time and effort into applying methodologies, practices, etc. And therefore, I'm sure you have questions, okay? So send your questions in the chat box. We'll be looking into it and keep polishing those skills. If you have any question that you feel is a little more let's call it delicate, and you are not sure you are happy sharing that question. So what you could do is to go ahead and send the question to right now, real time. You can send the question to jb@tradewithufos.com. That's my email. I have it open on my other computer screen. Therefore, I can see the question and I will keep it anonymous without saying who sent the question. If you were to have a question like that, and we can still look into it, okay? Because, sometimes, I mean, it happened to me when I was a student. Sometimes you have a question and it's a little personal maybe, and you don't feel like sharing in a group, okay? So we can do it this way so everybody can get their answers. Anyway, great. So let's begin. Disclaimer, as always, the following video clips demonstrations are for educational and instructional purposes only. Traditive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through a demonstration do not indicate in any way the results you may receive on using our products. Here we go. So the session is now officially introduced, and as I always say, here is a beautiful trade station with our even more beautiful UFOs. Okay. So let's begin. Okay. Let me see. Question from Kanchan. It would be good to ask, as I took time off for some time, I would refresh before starting back, and advice would be helpful. Okay. Yeah. So let me make sure I understand your question fully. Kanchan, so what you're saying is that you'd like us to talk about what is a good process for you to get restarted in trading after you. Oh, Subhash, that's you. Very nice. So you mean that it would be a good thing for you to talk about what a good process would be for a person who's been away for a while and restarting? That's what you're saying, or or you mean you would like to talk about a little bit of a summary of the new things that we've been doing since you've been away? You know, what would it be, number 1 or number 2? Let me know and I'll take a look at your answer, okay? So in the meantime, I'm gonna start with Lisa's question, and to do so, I'm just gonna get her email in the main screen. Okay, so here is Lisa's email, okay, and we can see that Lisa sent an email, and basically the problem that she was identifying is, got it, Subhash. I'll do that, no worries, that's a great suggestion, by the way. So what Lisa identified was that she was looking at, on the left, okay, she got the Thinkorswim platform, on the right, she got the TradeStation platform, and then when looking at stats, she was applying the 1 standard deviation calculation that we do when we do non-directional trades, where you got the 1 standard deviation below, the 1 standard deviation above, and then she noticed that the results she would get with TOS were different, okay, were different. And also she noticed that if she was to change the strikes, then she would also get different results, okay? So therefore, what I would like to do, okay, is I would like to go ahead. I didn't launch, I have to launch TOS too. So let me launch TOS as we speak. So I would like to launch TradeStation and TOS in parallel and look into that carefully, because I know some of you are using TOS. Some of you are with us live today. Some of you may be watching this later on recorded. But some of you are using Thinkorswim, the platform that belongs to TD Ameritrade, and very popular in future options as well. And if you are using that particular tool to do your analysis and you get different results, so we need to talk about, you know, what the reason for this could be, okay? So I am just loading TOS on my end. I'm just loading TOS on my end, and in parallel, I will also be loading OptionStation Pro. Okay. Here we go. So I got a couple of things loading as we speak. Okay. Yeah, TOS was doing an update, but it's done now, so that's it, it's loading now. Very nice. Good, so I got TOS ready to be brought into my main screen. So here is Thinkorswim. Okay, I am logged in as a simulated account. It's the delay data with TOS, but it's okay because it's the weekend. And then with TradeStation, I got OptionStation Pro, which is about to be fully loaded, I guess, in just a moment. Will be ready. Okay, so I'd like to start with TradeStation first, since this is what we are used to. Okay, almost there. Okay, so let's go ahead and look at, I don't know, McDonald's, for example. So let's say we are planning a trade on McDonald's, okay? All of this conversation we're about to have has to do with what we do when we are planning on non-directional trades, isn't it? So I'm sure you are tired to hear me say, just without even thinking about it, right click and analyze and sell an iron condor, right? So I say that all the time, okay? So then we can come into the analysis tab, and from there we can change the settings here to be 1 standard deviation above and 1 standard deviation below, okay? And now you would know by doing that you know, you are likely to see that McDonald's stock to move anywhere between 190 to 197 from now until November 22nd expiration date. And if that was to be the case and you happen to have UFOs above and UFOs below on your chart, then you know you do have the proper setup to plan on a non-directional trade, which normally we execute iron condors when we want to be purely non-directional, isn't it? So again, Lisa's question has to do with the values on the right. Okay. Hey Ray, nice to see you. So we are talking about the values on the right, because the question is, when doing this with TOS, or by the way, any other platform, you could be doing similar things with interactive brokers or also other platforms. Okay, so she's getting different results. So let's look into this. Okay, so I'm going to click on the Analyze tabs. I'm going to click on Simulated Trades, and then I will type McDonald's, and this will load the option chain. Okay, here we go. So of course, when loading the option chain, we also always need to pick the right date, or in this case, we're going to do a comparison. We need to pick the same date, which is November 22nd. And very similar that I have done in TradeStation, in Thinkorswim, you can also right-click, Analyze and Sell, and look for Iron Condor. And if you do that, TOS will place an Iron Condor below, right under in the bottom part of the screen. Okay. Now, the moment you do that, you also have 3 price slices right here. Okay, which are the price slices, where if you were to input 1 standard deviation above, 1 standard deviation below, then you would get some specific figures. Okay, so Lisa's problem was that she was getting different results when doing that with TOS compared to TradeStation. Okay, so with TOS we're getting 190.16, 197.73. With TradeStation we're getting 190.22, 197.57. Okay, so I guess we could call this close enough. Okay, I guess we could call this close enough. Because the thing is that for options platforms to calculate these values, many times there are different adjustable parameters that have an impact. First, the model that we are using for this simulation, because in the end that's a simulation, right? So TOS by default utilizing this particular model, which I always have a struggle to pronounce. I'll try. Jerkson-Stensland model. Okay, it seems it worked this time. But you also have binomial, you have Black-Scholes. So there are different models. Okay, so those settings can be changed in all platforms. So with TradeStation on the upper right, we got this settings wheel on the very upper right, where if you click on this wheel and you select common, notice how here you can choose a different pricing model. Okay, well, I have selected the same model in both. Okay, typically Black-Scholes, it's always I don't want to sound cruel for Mr. Black and Mr. Scholes, but it's always the worst model to use because it's the most theoretical. We will not have other models without that model. So that model is amazing, but at the same time, other models we could say are a little closer to reality of options price modeling. Okay, so that's why in TradeStation I chose this model with, by default, is the one coming with TOS, if I'm not mistaken. Okay, cool. So now the next thing is the interest. Okay, so 1.75 is what is coming by default. This is not gonna impact this calculation, by the way. Okay, but it may impact other calculations, so I'm just gonna mention it. So TOS is using 1.75 for the interest rate that is built in the price of options. Where TradeStation, we have it set up as automatic, and automatic is actually picking up 153. So you see, this is what I meant. Different options platforms have subtle settings in subtle places, okay? Apart from sometimes running calculations in subtle different ways. Also, what happens is that there are settings that could be different even when set automatic, okay? Because they may use the different data source to get that data, okay? But again, this should not create such a major difference, if you wish, okay? So that's a couple of things for you to know, okay? Now, the other thing for you to know as well is where are you looking at those values? Because you have 2 places where to look at those values. Normally, when using TradeStation in the sessions, I keep it very simple, and I just focus on this part of the screen when pointing at those sessions, when pointing at those values. Okay, I look at 190.22, 197.57, and keeping those values in mind, I would then go to the chart looking for UFOs, okay, that are located, beyond those price points. This is what I would do, okay? But some of you, instead of looking at those values here, you may be looking at the values up here, 190.22, 197.57, which, let's face it, they are the same values, so it should be the same, okay? It should be the same. Having said all of that, you gotta be careful with the platforms, because you always have this date parameter, which on TradeStation is quite convenient because you can just select nearest expiration, and therefore if the nearest expiration also coincides with this date, which it always does, then you are guaranteed that this value and that value would be the same as that value and that value. Okay, so then you're fine. But you need to be careful, because if you were to, by mistake, click on the calendar and change those dates, then you will get something different. Okay, and by the way, when going back to TOS, if instead of simulated trades, I was to click on raise profile, where you get something similar to what I had on TradeStation before, notice, okay, that you don't have an option here, which is nearest expiration date. That option does not exist. And I believe TradeStation TOS does it by default, but the option is not, meaning that if by mistake or out of planning another trade, you were to at some point click a different date, and now you changed to a different chart or something, you change the symbol or something, next thing you know, now you're gonna have here values which begin not making sense, and also here. Okay, and again, I guess this is just how certain platforms work, because notice if I go back to a date which is further out and I get to the expiration date, okay, so now I'm back to those figures. So just be careful with those different settings that are located in different places in the screen, okay? The other thing to keep in mind is the probability range. So, we have selected plus 1%, minus 1%, but maybe above you have selected 2, right? So now this range does not refer to the lines, okay? The lines in TOS, just like in TradeStation, they refer exactly to 119.16 and 197.73. Those lines are the same. The range, the probability range, refers to the gray zone that has been created beyond those lines, which if you're using one standard deviation, since that's the one I have below, then my gray zone will fall between the lines. But if you were to use a different value, such as 2 standard deviations, then the gray zone will surpass, okay? And I've seen cases of traders getting confused with that, and I know this is not Lisa's case, but at the same time I wanted to phrase it in case that has been the case or is the case of some of you, okay? Hey Maka, hey Brian, nice to see you all, guys. Jose, the other day I have a message from Bojan here, so let me read Bojan. So Jose, the other day I was looking at the ES setup, my trade triggered, and the climate change gave me an uneasy feeling for some reason. Do I stick with the initial setup or adjust? Okay, great question. We'll talk about that afterwards, okay? Very, very good question. So, yeah, so with TradeStation, notice that with TradeStation, again, we have a similar setting. I mean, in the end, an options platform is an options platform. We have a little bit of the same. So if I have number 1 here, it means 1 standard deviation is the same. I could select from the dropdown 1, 2, and 3, kind of like copy paste compared to TOS, but I can also go ahead and input something. I can input 1.6, for example, okay, or something like that. And again, this would create a gray zone beyond the lines. Again, the lines should coincide exactly with those numbers. So make sure you differentiate between the lines and the numbers below if you happen to be using the upper lines instead of the numbers below, okay? Okay, what else? Other settings that may impact the numbers that you have and may be the reason for the differences between TOS and TradeStation, which, as you can see, the way I have it basically there is no difference, okay? That's why I'm showing you each screen at a time, so you can look at it, maybe even take a screenshot, and specifically for you, Lisa, double check that your end looks like mine, okay? So when you look at common, I have selected implied, okay? You also have a choice of select IV skew approximation, okay? And let me explain what that is, and also let's see how this can be changed in TOS, because TOS also gives you that possibility. Not here, where was this? It was right there, setup on the top. So you can change application settings. And under calculations, okay, volatility calculation, you can use individual implied volatility, or you can use the volatility smile approximation, okay, which is kind of the same as in TradeStation implied or IV skew approximation. It's kind of the same, okay? So what does that mean? Well, to explain what that means, okay, and again, if some of you are not trading options, now I am about to drive you a little crazy, but bear with me, please, because it's gonna be important for the ones of you trading options. So if you look at options chains, okay, you have an expected move calculation. You have two ways on how to be able to calculate that. Okay, one is optimistic, one is pessimistic. Okay, so what is this? Because this is directly linked to this options volatility source of implied and IV skew approximation. To explain that, the easiest way for me will be to bring the TradeStation user guide, so that way I don't need to explain too much math, but you somehow see it written. Here we go. So I'm gonna scroll down, scroll down, scroll down, and here it says, okay, here it says pessimistic and optimistic, okay, and here it tells you how this is calculated. So a pessimistic way on how to calculate your price movements, which is the one I have selected, the one, I remember I suggested to use that, okay? So that is the same method that TOS utilizes, okay? And I also suggest to use that one, because what that one does is it utilizes the following formula. It takes the stock price times the implied volatility of the options you are using for that trade, okay? And that is multiplied by the square root of the days to expiration divided by 365. Now again, if you have never studied Black-Scholes model or things like that, this formula probably has no meaning to you. But let me explain a little more of what this means. The square root of days to expiration divided by 365 multiplied times the implied volatility, and you will understand exactly why this formula is so useful, and for options traders it's really an important one to have, even though the computer processes it for us, so we don't need to do it manually, okay? So everything volatility wise in the world of trading options is always annualized, okay? So for example, if I look at McDonald's and I load at a daily time frame of McDonald's and I activate implied volatility, okay, and it shows that the current implied volatility is 7.61, okay? What that number means, okay, is that based on the current price of those options, okay, which of course the price of the options represent how many people are buying them, how many people are selling them, how eager people are to buy those options, isn't it? So what that number represents is the expected projected, let me rephrase that, the expected projected price movement in a 1 year time. Now, it doesn't say up or down. So given the, how do I put it? The eagerness, I'm not sure if that word exists. Given the eagerness on how people buy options on McDonald's, and those are calls and puts, right? So they're betting on both directions, depending who they are. But depending on the eagerness, the average implied volatility for all those options across the board is 761, which means that the average opinion of the people that are buying options for McDonald's is that they expect that stock to move 7.61% in 1 year, either up or down. Okay, of course, this is not accurate or exact, or this could not be used to predict a movement of the stock or take profits. It will not be accurate enough, but it does represent, given the current passion for buying options on that stock, how much people expect the stock to move. A clear example is when stocks get close to earnings, where, the prices of the options become more expensive. Why? Because people are more eager to buy them. Why are they more eager to buy them? Because they expect the stock to move a lot. Why? Because of the earnings. So you see, the price of the options has built in some sort of an expectation, which we talked about that in the options sessions that we did in the past. This is known as implied volatility. My point today is that 7.61, it's an annualized move. So if you wanted to calculate how much is this in dollars, so what you would do, you would grab a calculator, okay, and you would get 7.61, sorry, let me say that again. You would take the amount of days in a year, 365, right? Following the prior formula, it was the square root, it was the square root of the amount of days to expiration divided by 365. So if you want to know the yearly move, okay, so you would take 365 divided by 365, which is 1, and you would do the square root of that, which is 1. Again, silly to do, but I just wanted to do it one step at a time to not to confuse anyone. We all know the square root of 1 is 1. So you get 1, and then you multiply times the implied volatility. Okay, so 1 times 0.0761. Okay, 0.761 is 7.61%. Okay, another way to do that is 7.61% divided by 100. That's 0.0761. So this times 1, okay, that's the amount of movement expected for the stock times its price, which is 193.86. In other words, that stock is expected to move either up or down $14.75 in 1 year. And again, this is not accurate, and you should not use that for a prediction, but given the eagerness, again, using this funny word, not sure if it exists, you guys tell me. That value tells you what people are expecting to happen in the future, given on how eager they are, okay? So this is, again, the implied volatility built in the price of an option. And in this case, is the average of all the options for McDonald's, okay? So, in other words, if instead of a 1 year move, which this is what volatility figures always represent because it's standardized, it's a options trading convention, it's standardized, so it's all yearly based, okay? So if you want to be in a trade for 10 days and you're wondering how far the stock is gonna move in the next 10 days, so you would do the same, you would do 10 instead of 365 divided by 365, which is 1, you would do 10 divided by 365, okay, 0.0273, and then you would do a square root of that, which is 0.16. Okay, and if you were to do that, I got you to this point in the formula. Okay, days, I use 10 divided by 365 square root. Okay, and then you multiply times the implied volatility times the price of the stock, and then you would know how much the stock is likely going to move in 10 days. Okay, so the implied volatility for the stock was 0.0761, and the value of the stock multiplied is 193.86. So all of it together, it tells you that in 10 days, the stock is likely going to move $2.44 up or $2.44 down. And if you were to do this process, okay, manually like that, well, let me tell you, it's exactly what TradeStation is doing when plotting those values. And the reason why TradeStation is doing exactly that is because I picked pessimistic and I selected implied. Okay, I selected implied. So TradeStation is looking at the implied volatility as a way to understand how far the stock is likely going to move from now until the expiration date, takes the amount of days to the expiration date, which in TradeStation are known as the DTE, days to expiration, number 5, right? So if you were to do the math with number 5, so 5 divided by 365, square root of that, multiply the implied volatility times the stock price, then you will get an estimation, which is a pessimistic estimation for the move that you expect to happen. That's what TradeStation is doing, okay, which is a nice calculation, isn't it? It's a nice calculation. Now, having said that, okay, there are a few things to understand. How many trading days you have in a year? 252. So TradeStation is using 365 in the formula. I would argue using 252 is more efficient. My understanding, I mean doing the same, 10 divided 252 square root times 0.0761 times 193.86, that's 2.93. It's a similar value, but it's not exactly the same. So my understanding is that TOS is using 252 and TradeStation is using 365. That's my understanding because it used to be like that with TOS, but there is no place where I can see it, or at least if there is, I didn't find it. Okay, so I don't know. So I'm just using what I believe I know, assuming it has not changed. Okay, so that is one reason why, or should be one reason why, TOS shows you 190.16, 197.73, and those values are close to 190.23, 197.56, but they are not the same. Again, it's close enough. We don't need to be that precise in this case because remember, it's non-directional trading. The only thing we're looking for is a couple of UFOs above, a couple of UFOs below, and that's it. And then let's collect time decay. And if the trade ends up losing, it's okay. But you know, probabilities are on our side, given the size of the range, given the UFOs, given the time passing, and that's good enough. So we don't need to be that precise. But again, you know, for you guys that have been spending time and you don't understand the difference for the values. So one reason may be that your settings are not the same, number one. Number two, the other reason could be that even though you are using the same settings, when TradeStation uses pessimistic, which is very similar to TOS, well, TradeStation is dividing it by 365, where TOS, I believe, I understand, that is dividing it by 252, which is the amount of trading days in a year, which, to be honest, to me, it makes a little more sense. But we don't need to be that precise. Okay? Now, another thing that was happening in Lisa's email is that she noticed, well, actually, before I go for the next question, there is one more thing. Okay? Now, let's do this. Let's do this. I'm going to add a couple of columns here. So customize columns. I'm going to add a volatility mode. Yeah, that should be good. So I'm going to move these to about delta and these to below volatility mode. Right there. Good. So now you can see that for this calculation, the value that was being used was 15.5. Okay, 15.5. So even though the, let me go back to the chart, the overall volatility for options on McDonald's is 7.61, when you selected that particular iron condor with that particular expiration date, with those particular strikes, okay, you got 15.5. So how is that calculated and why is that different? Okay, so let me uncheck the iron condor. Let me minimize it there. So we'll keep it there, but for now it's not doing anything. I'll come back to this. And what I would like to do now is just pick any option. So for example, I'm just gonna pick, I don't know, the 190 put. So what if I only sold one option? Sell the 190 put. So if I only sold one option, okay, notice that now iron condor is unchecked where the put is checked. Okay, so that put has an implied volatility of 16.81. Okay, where do I see that? Well, 16.81. I need to add the column 2, so let me add it. So volatility, implied volatility. Here we go. We'll move it up by 1. Thank you, Marcus. So yeah, so eagerness does exist. Thank you for that. I don't know, for whatever reason it felt weird when I pronounced it. I'm like, this sounds weird. But I mean, I do that from time to time. I guess that everyone who speaks another language, not as a mother tongue language, as a second language, we all get creative at times. But anyway, so 1681 is the implied volatility for that single option, single put, right? So if I look at the option chain, we can also see very well, we can see the value right here, okay? So now, what happens when you go ahead and you do an iron condor? So if I uncheck the put and I check the iron condor, okay, now it doesn't tell me it's 1681, it tells me it's 15.5. And why is that? Well, because what TradeStation does is TradeStation takes every one of the volatilities of each leg, which is 1681, 1555, 14 something, 14 something, and basically calculates the average of that, which is 15.5. And that would be the value being used, 15.5, to project and calculate where the expected price would be based on a one standard deviation move, which basically it's taking the implied volatility calculation. Because, by the way, the other thing I didn't say, maybe I should have said, is that in the world of options, everything volatility-wise, I did say is calculated for a 1 year movement, for a 1 year period. What I did not say is that everything is also representing one standard deviation. So you take the price, you multiply times the implied volatility, and now you know what's likely to happen in 68% of the cases, which is one standard deviation, because the Black-Scholes model or any other options model, they all calculate everything for one standard deviation. Okay, so you can just do it straight like that. Okay, it's very, very simple. Okay, cool. Okay, so now that we know better how TradeStation is doing this calculation, I was going to say, yeah, so we know now better what implied means, isn't it? So implied means either the implied volatility of the one option you selected or the implied volatility of the multiple options you have selected. Okay, if instead of doing that, I was to select, remember that other choice? It was implied volatility skew approximation. If you do that, everything will change a little bit. And notice how the volatility now being used is 1729, 1778. It's a similar way on how to calculate, okay? But also notice how the values here have not changed, okay? So really what is changing the projections of price, okay, beyond what you are utilizing to plot this implied volatility in the option chain is really the expected move calculation changing from pessimistic to optimistic. That would now make a change. Take a look on the right. Now it's 196, 190.95, where if I go back to pessimistic, it becomes 197 and lower 190, okay? So again, pessimistic is the one that we normally use, because another way to do it, and it's not wrong, okay guys, it's not wrong, if you use optimistic, okay, so it modifies the pessimistic factor to provide a value that has been tested to be a closer one to a standard deviation of a move, in other words 68% on a normal distribution curve. So that would be similar to utilizing historic volatility instead of implied, and short term, if you wish, which normally when we do non-directional trades, we don't use expiration dates which are too far out. Normally we like to do 1 week, 2 weeks, 3 weeks, 1 month, it's okay, but now we're a little uncomfortable with it, so we don't go too far out. So normally you want to pick what is a value which represents the most, the current time. And the current time is represented by the implied volatility, because implied volatility is real time. Isn't it? And it changes, it could change very fast actually. So Yeah, so that would be the recommended process, to use pessimistic instead of optimistic. Also, it gives you a wider range, and therefore, most of the times, not always, but most of the times it gives you a wider range, and therefore it would put you in a better position, okay? Meaning that your UFOs are further out. Anyway, so the last one thing that I have to discuss, having said all of this, is the other question Lisa had, which is, okay, well, not only I had a little bit of difference between TOS, okay, TOS and TradeStation, and again, if you have the parameters the way I just showed you, you should be, what I said, close enough, and the difference is probably because TOS is using 252 days in a year, where TradeStation is using 365, and this is something that I believe cannot be changed. So that's what it is, okay? But the other way, the other question that Lisa had, and that's the reason why she got differences, is that sometimes when using TradeStation, if you were to pick different strikes, so let's go ahead, and instead of 190, I'm just gonna do 175. And if I do that, the values have not changed, okay? The values have not changed. But what if I do, instead of 197, I do 112.5? Well, you know what? The value still did not change. But what if I do, instead of one? So notice that if you change the values of the options you buy, okay, it didn't impact the calculation. Okay, even though those volatilities now are different, 34 and 30 instead of 14 and 16. Okay, the volatility here has changed. The average is different. Okay, the average is different, but the values are still the same. Okay, so what does that tell you? Well, it tells you that TradeStation, it's and this is my understanding, and by the way, I've seen this change through time, so it may change again with new releases. But when you look at the -1, which are the options that you sell, where really the risk is, okay? So if instead of 192, I was to pick 180, okay? So now the volatility has changed to 15.55, okay? Where earlier it was not 15.55, it was 27.61, okay? 27.61. You see that? So in other words, depending on which release of TradeStation you're using, okay, it's either TradeStation has a process where sometimes you change the strikes and it will impact those results, but there are times where you change the strikes and it doesn't change the results. It's the same. This, again, what I've seen through time is that depending on the release you're using TradeStation, also being 9.5 or 10, because there are releases that took place in 10 that have never taken place in 9.5 because it will not be supported anytime soon. So you may have seen these values to change, where in my case it hasn't, okay? I believe that what happens, and again, I don't have full visibility of the process, but I think TradeStation has done a neat job, because what would normally happen is that if you pick up an option, like for example, this one that doesn't have a clear implied volatility, okay, or that one that has a crazy number, okay, or a very different number on the call side compared to the put side. And the reason why is because there is no liquidity, because this option got such a small delta, or such a big delta, like -1 or 0.96. So those values, is when you start getting what we options trader called fake Greeks. All those, that implied volatility is really not a Greek, but kind of, so it's calculated. So all those values start being not close enough to reality because of either lack of liquidity or deltas that are either too great or too small, and therefore those options prices are prices that are set by the market makers, but they don't fully represent the reality, and therefore you have values of implied volatility which actually make no sense. So what I believe happens is that TradeStation is running some sort of a process, and again, I don't know this for sure, but TradeStation is looking at the average value of all those averages, but those averages are weighted, I should say inversely weighted, with the delta values. Okay, so you are giving more importance to strikes which are close to the at-the-money price, and those implied volatilities are more relevant to calculate this average value compared to others. Okay, and they are using some sort of a formula to come up with, let's say, a fair value for the implied volatility to be able to then calculate and project where price should be in that amount of time until the expiration date. Okay, and again, what is not nice, if you wish, is that they may release updates and they may have subtle changes on how those calculations are performed, and maybe there is a little bit of change in the calculation and we are not being told. So that's not so nice, if you wish, but at the same time, it's not that problematic at all, because as I said at the beginning, when comparing TradeStation and TOS, we don't need to be that precise with that calculation. It's just for us to have a reference. So above and below those values, we find UFOs. So we don't need to be that precise, and therefore, I would say it's okay. Okay. Now, Ahmad, I see. I mean, I'm still missing a bunch of notes that you guys have typed. So no worries. I'm gonna take care of everything. But I see a comment from Ahmad where you say that your values are 181.59 and 206. Okay, which that is significantly different. But you also say you're using 9.5. So I would guess that probably what happened is that probably one of the releases that took place with 9.5 maybe had a bug, because that value is way too different. Okay, way too different. I mean, you can see that not with my TradeStation, but also with Thinkorswim, we have more or less the same values, and yours are very, very different. So probably what happened is that there has been some bug in some update of 9.5, and because they are not supporting it the same way anymore, and they will tend to stop supporting it, maybe they never got to fix it. Or because there are less people using 9.5 nowadays compared to 10, so probably maybe there is a bug and they never got to realize there is a bug. Okay. So yeah, so I'm just gonna show you. I cannot show you 9.5. Okay. At the moment, but I'm just gonna show you again the settings for you to make a note. Okay. Make sure you're using implied. Okay. Make sure you don't use Black-Scholes. I think it comes by default. You use Jerkson and Stensland. Okay, and then make sure you are using pessimistic calculation. And if you do all of this and you still have very different values, then there is wrong on your update of 9.5. Okay, would you recommend to use TradeStation 10? Yes, the answer is yes. Is it tricky to adapt at first? Yes, the answer is yes. Okay, I would recommend you to have a fresh install. I would even recommend you to run TradeStation 10 in a virtual machine the way I do. You get less power for your TradeStation, but you get less opportunities for TradeStation to hang. So it's a nice to have. Also, of course, you need to know how to set up a virtual machine. So you can either hire a computer guy to help you, or maybe you don't need to do that. Just install TradeStation normally and that's it. Okay, but you may go through certain situations that I've seen because TradeStation 10, in one hand, we know has a 32-bit architecture, which sometimes fights a little bit with Windows 10, especially when Windows 10 releases new updates. And TradeStation sometimes needs to run to fix that, and sometimes they fix it well, sometimes not so well, and sometimes it's a little tricky. Okay, so that's why the cleanest way to run it is just to run it in a virtual machine by itself, like I'm doing now, and really it's basically zero problems. But I mean, TradeStation 9.5 sometimes hangs, right? So I mean, that could happen too. So I have a good experience and I do recommend it. Okay, but be ready for some adaptation time, because sometimes strange things will happen. Okay, and I guess it's what it is. It's just running stuff on Windows. Maybe it's TradeStation, maybe it's Windows, maybe it's the combination, maybe it's 10. I don't know. Just to share with you guys, in recent times, and this may have happened to some of you, in recent times we had a few of our app users connecting with us because they updated TradeStation 9.10 to the last update. I think it's update 41. And when that happened, AutoUFOs stopped working, And it's not like it stopped working because it's not working. It stopped working because it was giving a message, an error message, which is the app has not been, how was it, like validated or approved or something like that, where that was not the case at all, okay? So the way to fix that was very simple, just to delete the TradeStation folder where TradeStation downloads the apps and the apps are stored in your computer. So you just deleted that folder and relaunched TradeStation to force TradeStation to re-download, and everything was fine then. You know, so little tricks like that may happen to you if you back up 9.5, install 10, and then restore what you had in 9.5. Then there are certain things that, you know, may behave weird, and you need to spend some time with customer support where they have you to delete stuff, uninstall stuff, reinstall stuff, and then you get to a point where then everything will be smooth. So there will be a little adaptation, but again, in my mind, it's worth it, especially because one of these days they will start supporting 9.5, and then what will be problematic as a trader is that you have to rush into that adaptation, and then you start trading and you are not fully confident of your platform, and that's not nice, okay? Again, having said all of that, I love TradeStation, so my opinion may be biased because I love it, but that's just me, okay? So some of you may be into other softwares, and that's fine as well, okay? Okay, so good. So I believe that this, I'm just looking at all the questions here from Lisa. Yeah, so yeah, I think this should answer it all. I mean, that was a little bit of a long answer. At the same time, hopefully this answer also give you a little bit more insight on what's going on behind the scenes when you launch an options trading platform and some simulations are being done. So, you know, we looked at those volatility calculations, you know, those square roots and all those things. And if you have not seen that before, probably that was a nice one to see, okay? But anyway, so let me go back to the beginning so I can start with questions again. So Subhash was saying, hey, I've been away for a while. What have you guys been doing without me? Update me, Jose. This is what you asked me to do, isn't it? So let me update you. Okay, I'll take a sip, guys, if you don't mind. Okay, so what I'm doing on my other computer screen, and I'm bringing it to the main screen right now, is I am loading the playlist with the sharpening sessions, because apart from pointing at it and certainly recommending that it would be healthy for you to go ahead and take a look at what you missed, certainly just by going over this, okay, you kind of get a feel for what we have been doing in recent times, okay? So one of the things that have been very relevant, Suhash, in recent times is that we came up with a new flowchart, okay? And really, we didn't reinvent the wheel or anything like that. It's just that by listening to you guys, it seems that some of the rules that we were utilizing were creating some confusion. So we, trading could be approached in many different ways, okay? And as long, you know, there are two key questions to be answered in trading, isn't it? I mean, let me pause here for a second because this is something that all of us know, but I would like to say it. There are two key questions that always need to be answered in trading, no matter what you do. Question number one is it time to trade, yes or no? And if so, long or short? If you don't know, and if you don't have a clear objective answer to that question and you trade, you may be trading when it's not right time, or you may be trading in the wrong direction. So that's the first question for you to ask yourself. Second question is, once I concluded that it's time to go long or time to go short, the next question is, okay, so which price should I buy at and which price should I sell at for entry, stop, and target? And then execute your trades, okay? And then, of course, you know, trade plan, managing your emotions, discipline, right position size, risk management, all those things. But those two questions need to be answered by your methodology. So the methodology we were using with the prior version of the flowchart was certainly answering that. And the methodology we are now using with the current flowchart is also certainly answering that, okay? So therefore, we are fine as long as you answer those two questions and you use tools that give you an edge, then you should be fine in your trading, okay? So here's the new flowchart, and I'll just give you a crash course on the new flowchart on what are the changes, okay, or what are the differences. And by the way, Bojan, I will also answer your question on what you said, okay? But the other thing I want to say, since we're talking about methodologies and things like that, I'm kind of diverting, okay, but I think it's all related, and today we're just having a Q&A session, so I think it's fine for me to do so. It's okay for you guys, okay, because some of you have been with us in our community for some time, and you've been looking at how we put a trade together. You're using AutoClimate, you're using AutoUFOs, you are following exactly this flowchart, and it's working well for you. So great, don't change it, keep going, right? But also there are some of you that may be part of our community for less time, and maybe you already have a very strong process on how to look at the market climate, and you don't necessarily need to change that. So instead of looking at the market climate using AutoClimate, you just can do something else, you know what I mean? Or if instead of looking at AutoUFOs combined with moving averages, you want to look at AutoUFO combined with Fibs and something else that you are accustomed to that works well for you, and now you make it stronger by adding more technology, go for it. But bottom line, you need to have some sort of a process, okay? Now, for all of us to speak the same language, I put together this flowchart, so we are all executing in the same way, and by the way, I know it's working well. Some of you are reporting that, you're happy, so then, I'm happy too, okay? But it doesn't need to be exactly like that. Therefore, there is some level of flexibility on the boxes and the structure of your flowchart, depending on how you trade and the tools that you use, okay? So given that level of flexibility, we took version 1 of the flowchart and we made it version 2. And the reason why we did that is because we were told that, based on emails and comments and stuff, that some traders were getting confused, especially when defining the target, because we were doing an extra change of time frame before. So what we did is that we slightly simplify the flowchart to remove kind of like a couple of steps, okay? And we also added one extra step when it comes to trade management, which is climate change, which, by the way, Bojan, that's your question, isn't it? So going back to you, Subhash, this is one of the important sessions for you to watch to catch up with what has been a minor change since you've been away. It's not a big change, but just for you to make sure that you are 100% focused on what we're doing as you are reconnected with us and back to trading. Okay, I'm glad to see you back, by the way. Now, another thing that we did that was important. What else did we do that was important? Yeah, I think. Well, it really depends. I'm not fully sure right now in my mind, Subhash. When was it that you started getting so busy that you had to put trading on the side for a while? But I think it was just a few months ago. So therefore, probably this page is the page that you need. Okay. Not sure if you've watched the trading psychology session that Bojan did. If you have not watched it, that's a must. Okay. And that, by the way, that's for everybody. But you guys need to be watching that. Okay. So anyway, so this page kind of summarizes what you may have missed, okay? And as long as you catch up with this, then you're welcome to join us in the live sessions as well, and for sure, you'll be able to follow. Anyway, so back to the questions. So Bojan, Jose, the other day I was looking at the ES setup, my trade triggered, and the climate change. Gave me an uneasy feeling for some reason. Do I stick with the initial setup or do I adjust? So I'm gonna give you two answers and then I'm gonna give you an instruction. Okay, just let's put it this way. So the two answers is that first, answer number one, doing nothing is always the right thing to be done. In other words, if you plan to buy at this price, have a stop at that price and have a target at that price, and you do nothing at all until whatever happens, which is you reach your target or your stop, no matter if the climate change or not, that's right. Because you were entering the market with odds in your favor to do that. You had managed your risk in case that was not going to happen. So doing nothing is the right thing to be done. So if you were to approach it this way, go for it. Congratulations, job well done. That's it, done. Okay. Now, having said that, And this is why we added climate change to this process, because it created confusion at times, confusion that makes sense. And also it depends on which markets you trade and which time frames and which countries too. You'll see why. So some traders said, okay, wait a minute. If you get into a trade and it's moving your way, moving your way, moving your way, moving your way, and the target is much further out, but then it starts moving far enough against you, where it may still go to that place, but it's strong enough in the opposite direction where the climate actually changed. Well, what would be better for me? Okay? Collect whatever profits made at that time and start trading in the new climate direction. And if the climate in the future was to change, start trading in the new climate direction again, and hopefully you'll get to that final target. So what would be better? To keep adapting to climate, since is the first step of our process, right? So should I keep adapting to climate and be more active, take more trades, and always be with the climate? Or should I just stick with whatever plan was at the beginning, no matter if the climate changes or not? Okay. Well, again, as I said before, doing nothing is always the right thing to be done, and it's justified and it's fine, because sometimes the climate pause and change direction for just a little bit and then they go back. So it's okay. It's not a crazy thing to stay in the trade. But at the same time, if you have a personality where you like to be a little more active, which I believe is your case, Bojan, so probably adapting to climate and closing the trade and replanning new trades probably makes you feel better. Okay, and you even say it gave you an uneasy feeling. So just get rid of that uneasy feeling very easily by adding the climate change rule in your trade management, and that's it. And also I was talking about markets and countries because, for example, let's say you were to trade futures. Well, you could actually keep the initial trade long, if that was the case, open, while you get another trade short as the climate has changed, and deal with two trades at the same time. You could, but doing that in one account is a little uncomfortable. So in some countries, you'll be allowed to have two different accounts to be able to do that. In some countries, you'll be allowed to do the same thing in two accounts without having orders to cancel each other. Okay, like for example, in the US, if you go long 3 contracts of S&P futures and then you go short 3 contracts, then you're flat. But in some countries, you will be allowed to be long and short at the same time in the same account, depending on the asset and the country and the broker, okay? And therefore, you could actually keep the original trade open, but go for the climate change, okay? So you have technical reasons to do one thing or the other, but you also have mindset reasons, which in this case, okay, Bojan, you said you felt uneasy. So don't fight it, just use the climate change rule. That would be my suggestion, okay? Okay, so let's keep going. Hopefully this answered your question. You're thanking Lisa, very nice. Yes, definitely. Yeah, you should say, I only show you the beginning part of the email. You know, she's been so detailed with the screenshots and everything. That's so cool. Thank you, Lisa. Irwin, I took 2 contracts and has not reached the safety target and new UFO form. Should we change the stop loss to the new UFO? Yeah, you should. Okay, this is, it's an optional rule, isn't it? The UFO trailing exit is an optional rule. But if you choose to use it, which has pros and cons, like everything we do in life, so we talked about that in the sessions. So if you are okay with the cons and you make it your rule, then you do it. Okay, in the sessions, I said yes. My first answer has been yes. Because this is what I do in the live sessions when we trade together, isn't it? Good. Yeah, Marcus, thanks for that. Bojan, by the way, everyone, if you don't trade options, you should definitely learn how to. Check out the option sharpening sessions by Jose. Thanks a lot, Bojan, for that. And yeah, you know, they're a little bit of my passion, isn't it? So, I love trading everything, but options are really special. I never even knew what options are before the sessions, and after a while it starts clicking. Options give you options. Here we go. Yeah, they do. Marcus, thanks, Bojan. I've started watching the sharpening, but haven't traded options yet. I definitely want to get into it. What makes you so keen about options? Biggest thing for me was getting paid for waiting. As a short-term trader, sometimes I get anxious to get into a trade, whereas with options, time decay comes in very handy to alleviate my anxiety. Very nice, very nice. Yes, absolutely. Nice to hear as well. Motivates me even more. Love it, guys. Love it, love it. Okay. So Ahmad was asking about TradeStation. Very nice. Mark, how are you, Mark? Very nice to see you, my friend. So the best way to migrate to TradeStation 10 is to delete 9.5 first and then install 10, correct? You don't need to do that. So you could migrate directly, but yes. At the same time, I will say if you're gonna delete 9.5 just so you have a clean install of 10, uninstalling 9.5 is not enough because they are hidden folders, they are entries in the Windows registry, so there are a collection of hidden things that will not be removed even if you uninstall 9.5. So if you really want to have a clean one, so uninstall 9.5, but also contact customer support with TradeStation and ask them that you want to do like a complete cleanup of everything, including registry, temporary folders, everything. And they will go beyond uninstalling, and then you go for 10. Okay. My suggestion is that this is a little tedious, so my suggestion is just install 10 on top of 9.5. If everything is fine, that's it, you got it. If you have issues, if it doesn't run smooth, if it's a little slow, then maybe something needs to be reinstalled. So then you will want to do a full uninstall of everything and start from the beginning. Okay, so I would do that. Okay, but I myself did many times in different computers, installing 10 out of 9.5 directly without uninstalling, and I've been fine. So again, sometimes TradeStation 10 will be tricky, and really, it's kind of random. It basically depends on your hardware. I don't know. Sometimes I've seen, like the other day, for example, just to give you an example. So there was this very modern machine, Windows 10 installed, updated with everything. TradeStation never installed before. The trader installed TradeStation 10 for the first time ever. Okay, and then it was not working fine. What was the problem? For whatever magic reason, when the installation took place, TradeStation processes were blocked in the Windows firewall. Why is that? No idea. With other computers it doesn't happen, but with that particular machine, with whatever hardware they had, I don't know how or why, but for whatever reason the installation didn't unlock the firewall for TradeStation processes, so there was no way to load a chart, not even log in, right? So the trader activated that manually, and then it's all fine, right? So again, those are certain things that may happen to you. So you just need to be ready that maybe you have to call customer support, and maybe, by the way, when you call customer support, you get the right guy, sometimes not, so you have to call again, and then you get the right guy, and now everything is fine. This at least has been my experience, okay? Very good, I'm just reading, guys. 2 months back, Subhaj got it. Yeah, Subhaj, just, at your own pace, the recordings are there, and if you're super busy and office time is just demanding for you too much, and that's what it is, so you know what, that's what it is, so take it easy at your own pace. What you don't want to do is to stress yourself out, start taking trades in a way that is rushed, or you get emotional because you missed that trade, and just understand your situation. Maybe you switch your trading style to longer term, do your planning over the weekend, execute over the weekend, let your trades happen more slowly. Just find your way, and we'll be around. Okay, so it's all good. Question. For safety target for futures, we have safety target at 1-to-1. How do I can set safety target for Forex trading in quantity, as if I set target 1-to-1, then I will only cover 50% of risk? Well, I'm not fully sure I follow you, because precisely the target 1-to-1 is to cover 50% of risk. Because if you make 50% of the profit and you are left with 50% of the risk, and then you get stopped out, so then you are breaking even, which is the purpose for the safety target, is to get you to safety by removing the risk, which removing the risk means break even. So doing it in Forex would be exactly the same as doing it in futures. You look at your entry and your stop, calculate the distance, and that is what you add to find where your safety target would be. It's exactly the same. Question is, how can the safety target can be set when trading position in quantity instead of lot size in futures? Yeah, so, okay, so I think I know, I think I get your point. So, okay, let me do this. I need to, just give me 1 second, guys. Just a little connections need to be made here. I need to connect a cable. So 1 second. So let's say just 1 sec. Almost there. So I'm bringing a Word document here, just so we can make a few notes. Okay, so let's say you plan a trade in Forex, okay, with a Euro US dollar, for example, just to pick one. And when you plan this trade, you set a final target to be I don't know, 1.1120, I'm just making this up. You have a safety target located at 1.1080. Your long entry was located at 1.1070, and your stop loss was located at 1.1060. Okay, so with TradeStation it's very easy to enter those trades because you have the matrix, and TradeStation is a pretty powerful and flexible broker. So there are many things that you could be doing that could really help you to get this trade in just by dragging your prices on the matrix, and that's it. Now, if you trade Forex, I am guessing that the origin of your question is that you are trading Forex using a broker such as an MT4 platform or something like that. So I'm bringing my phone into the main screen. So you get to see my phone and you get to see the MT4 platform. So I can show you how I would place this trade with a different platform, which is not TradeStation, where I still want to have safety target and everything else. Okay. So now the one thing I didn't say is what would be my size. Okay. So let's say my trade size is, I don't know, 150,000. Okay. This is 1.5 lots. Okay. It is also 15 mini lots, correct? So let's say this is the size I want to trade. Okay. Well, if I want this trade size, right, and I need to come up with 50% of the size for my final target, and I need to come up with 50% of the size for my safety target, okay? So how much is 50% of 150,000? Okay, well, I don't think I need a calculator for that, but just to be visual, that is 75,000, right? So 75,000 means that the trade size I need here, okay, will be 75,000. The trade size I will need here is 75,000, and the trade size I need at entry and stop would be my full 150. Okay? So I believe, if I understand correctly, your question is, how can I input this into the platform of a Forex broker? The classical platform is MT4. So let's look at it. So I'm looking at the euro, and I'm just going to place a new order with the euro. Okay, and when you look at the new order, first you have a drop down on the top with market execution, buy limit, buy stop, sell stop. So of course it would be a buy limit. Okay, this is what we do with TradeStation 2. Okay, and of course I would choose good till cancel, which is nice. Okay, and then I need to input 4 parameters, which is the size, the entry price, the stop, and the target. But I'm missing something here, right? Because I have a price, I have a place for the price, I have a place for the stop in red color, I have a place for the target in green color, I have a place for the size above, but what about my second target? Or what about, the specific size for each target where I got 2, okay? And that is not available, okay? It's not available. And the reason why it's not available, it's because it does not exist in most of the Forex platforms. Even if you do it with TradingView, where you can execute from TradingView, same story. You have entry, stop, and target, but you don't have 2 targets like TradeStation. So what would you do? You are then forced to place 2 orders. So what you would do is that you would need to find your size, okay, which 75 would be input in this manner with MT4, because remember, in MT4 everything is divided by what a lot is, which is 100,000. So, okay, sorry for that. Okay, so let me do this. It doesn't fit. I'll do 100K. Here we go. So 75 divided by 100K, that is 0.75. That's what it is. Okay, it's almost 1 lot. It's less than 1 lot. It's 0.75 lots. Okay, that's what it is. So you would do this trade this way. You would input your entry. Okay, which in this case it would be. Okay, 1 sec. I got my keyboard. Keyword here. 1 second, guys. Yeah. Now I'm ready. So you would input the price. So 110.80. That would be your price. Okay. The stop would be same story. Input your price. So it would be 110.60. Okay. And then you would do the target, which is 1080. Okay, so you would place half of the trade with 1 bracket order and another half of the trade with the other bracket order. Okay, so you have size, entry, stop, and safety target, and you will now click the place button. And once you are done doing that, you will then do the same again, but then change the final target to be 111.20, which is the final target, and then you would go for place order. And by doing that, you technically place 2 orders. Okay, they are both 75. None of them is 150, but 2 times 75 is 100,000. So because you have 2 times the buying, you get 150. Because you got 2 times the same stop, you get 150,000. Because you got 1 time 1120, then you get 75, and because you got 1 time the safety target, you got 75. So basically, you do the trade twice, and then you are good to go. Okay, that is how you do it, and hopefully this answered your question. Okay. Anyway, so I will disconnect my phone. I think we are far. More questions. Subhash, question is, how can the safety target can be set when trading position in quality instead of lot size in futures? Okay, we talked about that. Yeah, thank you, Jose. My pleasure, Bojan. France. Hi, Jose and all. Asking about trade management. So to use the climate change rule after hit the safety target, or can we use it before? Oh, yes. Yeah, before. I mean, it's this, the flowchart. I understand your question now, Franz. Thank you. For a second, I was misunderstanding what I read. So all these rules is whatever happens first. Does that make sense? So you hit the safety target first, great. You reach climate change first, great. It's time to stop yourself out based on time because you use type stops, great, get out. It's whatever happens first, that's what you do. Good question. Subhash, you're using Oanda, so Oanda has MT4, so you can do it like I did, or you can actually connect Oanda to TradingView, so you can do what I did with TradingView as well, which is basically copy-paste of what you saw. Take a look. There is an order panel on the right side of TradingView. You know, you can, I mean, let me start from the beginning. So you can click on Trading Panel, okay, connect to a broker. Okay, you can connect to paper trading, or you can connect to other brokers too, including Oanda. So you can go for Oanda, okay? And once you have done that, and you are connected to Oanda, you will just click here on the right. You have the order panel, so click, uncover the order panel. Of course, I cannot show it to you unless I connect to a broker, so I'll get the paper trading. Okay, here we go. Connect, done, nice. So now I got the panel. And then you would select, okay, I want to go long, so click buy. And then what? I want to buy, well, this is not the euro. Let's change to the euro. So we do the same exercise, EUR USD. Okay, well, by the way, careful, in your case, you will need to do EUR USD, okay, EUR USD, and do not click enter like I did. Click Forex. So you're giving all the choices, and in your case, you pick Oanda. Okay? So you click Oanda. Okay, and now you are connected to Oanda paper trading. You see that? Okay, so now you will click buy, and then you will do what I did before, which is 1:10:70 was the entry. 1:10:60 was the stop. 1:10:80 was the safety target. Okay, and assuming you wanted 75,000, so you just type 75,000. Okay, and then you click buy, which I cannot now because the market is closed. Okay, then what do? You change nothing. You only change the final target to be 1:11:20, and then you click buy again. And now you just send to Oanda 2 bracket orders that allow you to do what we do in futures, in Forex, exactly the same way. Very good. Maka, you can also do partial close at your first target. Yes, that would be a manual action, okay, which is certainly valid as well. Yes. Subhash, okay, got it. Jose, thank you. Need to set 2 orders first, safety first. Now, yes, you got it. Hélène, wonderful to see you. Thank you very much. Thank you. Yeah. Cool. Okay. So I believe that I got through the whole list of questions. So that may imply that basically it's time to conclude our session. But feel free to type. If you have more questions, we don't need to stop here. We can keep going. So if you have anything else to add, please go ahead. Maka, I agree, Hélène. I was unable to follow Jose's sessions for a while. It's nice to say great changes. Thank you very much. Yes, and more changes to come, guys. We have so many plans of things that we want to do, little by little, to keep helping our community as we are growing as a community, and we know more and more what you guys need in your trading life, and how we can add more tools and more support and more everything. And I am loving as well that every time more and more the sessions are more interactive, which means 2 things. Means that you guys are building some confidence in yourself and your trading, so you are more open to share your trades or discuss or share ideas or thoughts, which is nice to see. But also, sometimes you guys are answering questions from each other, which makes me very happy as well, because it's not like you save me time to talk, but it's more about seeing that your confidence levels for some of you are getting to a point where you are very, very happy to answer questions to others as well. And what's beautiful is that your answers are right. So I'm super happy to see that. And also lots of great activity in the Telegram channel. I don't know if you guys are connected or not, but if you are not using the Telegram channel, you should, okay? Every single day, you have traders in there, sharing trades, screenshots. I mean, Bojan has been super active recently, Dirk, you know, Lisa, everybody, okay? I'm missing names. I apologize in advance, but it's been great to see your activity, guys, okay? So if you don't know how to connect, use our email, reach@tradewithufos.com, shoot an email, we'll send you the links so you can connect with those groups, okay, and be connected. And by the way, we are planning on more initiatives in the form of channels, probably for 2020, and more stuff that will be also very helpful, okay? So send your suggestions, by the way. If there is anything that we are not doing that you think would be helpful to you, I would love to hear that, okay? Anyway, so what is the best setup to use for Forex? Mark, the answer to your question is this, the flow chart. Follow the flow chart and you'll find the setups, okay? If you have not watched the flowchart session, Mark, go take a look. Don't miss it. It's important, it's relevant. And if you need any support after you watch it, you know, you can shoot an email. I'll be more than happy to take a look and give you answers, okay? Yes, Bojan, good one. We're gonna be next week, actually not next week, the week after, from 25 to 29, I am gonna be running a Forex class, starting from the beginning from scratch all the way to having a process. So some of the things that we teach in that class, you may know already. Some of the things that I will teach in this class, especially if you have not traded Forex before, will be helpful to you, okay? But just keep in mind, this is a class where we start from zero. So there are certain things, such as what is long, what is short, probably you know already, okay? So we start from the beginning, and it goes all the way until having a complete process on how to trade Forex, which means that we'll talk about Forex too. So if you wanna join me, shoot an email to us as well, and we'll give you more information about the class, also the links, so you can register for the class if you choose to. It's gonna be 3 hours a day, live online. I'll be the one delivering it. And the timing, if I'm not mistaken, because of the different time zones, but I believe is 8 to 11 in the morning, New York time. So if you're in a different time zone, it's gonna be different. But that's more or less the timing, okay? Yeah, so let me see. How do you join our community, Pavnit? Very simple. You are part of it already, okay? And if you want to be a little more kind of formal on how to do that, not sure why this change happened, but it's okay. So I'm just gonna go ahead and type a website, so www.tradewithufos.com/join. Okay, if you go in there, there are multiple memberships, so you can go ahead and join whichever memberships you like the most, including the one that is free, that we call Basic, or the Basic Plus as well. And that way, you know, every time we do sessions, we send you emails. Every time we do something, you are kept on the loop. Okay, and then of course you are welcome if you feel the benefit. If you want to use our technology, you can also subscribe to the apps AutoUFO or AutoClimate. Okay. Marcus, I want to get into options. What's the sharpenings? Wondering how and where to start. And the notes and the scanners are available for download. Yes, the notes and the scanners, we can send that to you, Marcus, and everyone else. Shoot an email to us. We'll send it to you. No problem. And certainly when it comes to options, we have a lot of room for improvement. The information available on the YouTube channel, I believe it's actually quite powerful. But certainly we have room for improvement when it comes to giving you more structure and better notes and better everything when it comes to the content. Okay, so be ready for, let's say, a few months from now, and you'll have that available, okay? Elaine, Jose, are the UFOs in the same place? Numbers in TradingView and TradeStation for futures? Yes, yes they are. As long as you use the same time frame, the same data feed, yeah, they are. Mark, I saw that there is a special Forex class you are going to be doing. Yes, you're right. This is what Bojan was referring. And again, Mark, if you're interested, shoot an email and we'll give you more information about that. Yeah, what is the ideal bars to be loaded? 1597 for everything. Yeah, well, you've seen this is a number I like, okay? It doesn't need to be like that. It depends on what you are loading. So for example, if I load a chart here, like the 55-minute time frame, right, which I normally use for the trades, isn't it? And I want to have, here we go, and I want to have a proper understanding of this probability metric. So then for that purpose, I have set up 1597 set as a default, okay? And yes, I want that number so I get a good measurement of stats, okay? But then if you look at other things, okay, such as, for example, let me load the S&P 500 workspace I use when we do short-term intraday. Okay, so 1 sec is loading. So, like for example, if you look at the bottom 2 timeframes below, which are the reactive timeframes, really, I don't need any statistical analysis of anything in those timeframes, okay? The only thing I need here is to see a UFO whenever it's time to take a trade. So for those timeframes, I am actually loading 55 bars, which is nothing, okay? So I'm keeping it very low. That way, my TradeStation is, you know, more relaxed from a point of view of computer power, okay? The ones above here, also I load, how much was that? I think it was 89 bars. 89, okay? Just so it fills the screen, that's it. Because I don't need anything else, okay? I mean, if you were to do backtesting or something like that, then yes, but when you're trading, no need, okay? And that way your TradeStation will be running a little more smoothly, okay? France, well, no worries, my friend. You don't need to apologize for anything at all. Okay, it's all good. Mark, I mean brokers and charting. Let me see. I'm not sure what. Would you mind to rephrase your question, Mark, very quickly? I think I missed some of your prior comment, and I'm not fully understanding your question. It's my personal class, Pavnit. Yeah. Very good. So I'm just going to wait for Mark reply, and then we'll call it the day for our session today. So I am guessing we always have, of course, a little delay with the YouTube streaming process, and therefore I'm just going to wait a few more seconds. Oh, best setup for brokers and charts. Oh, I got it, Mark. That was so silly of me to answer the way I did with the flowchart then. Yes, got it, understood. Yeah, so for me, look, this may sound funny to you, but especially when you are learning, what I've seen very efficient for students has been to separate the trading and the execution to be in 2 different pieces of technology. In other words, use TradingView for your planning, so you are only dealing with charts and there is no temptation to click the buy or the sell button, so no emotions are involved, and it's all about the planning. And then once you are done with planning, you take your phone, you install the mobile app of whatever broker you use, and you place the order from the mobile app. That's it. By the way, this applies to everything. Okay, so in the US now, for example, if you trade stocks with most of the key brokers in the country, if you trade from a mobile app, you pay no commissions. So don't place the order from TradeStation, from the desktop TradeStation. Just do your analysis with TradeStation or TradingView, and then you place your orders from the mobile app, so then you pay no commissions. But the benefit is that then you separate in your mindset. This is all about trading psychology, guys. in your mindset, you separate what is planning from what is execution. So there is no getting emotional, getting fearful, getting greedy, all of this. I mean, it could still happen, of course, we are human, but you have less chances of this to happen, okay? So little tricks to trick yourself, okay? And I would say that's a nice one to have. Many times, I have people that say, oh, but you know what? I want to trade Forex and most Forex brokers use MT4. My answer to that is perfect. Get MT4 on your phone and use TradingView to chart. That's it. Sometimes, some of you actually have contacted us in the past or even not too long ago and said, hey, you know what? I use interactive brokers. I use Think or Swim TOS. Are you guys planning to develop the app for those platforms? Well, the answer is maybe yes. Why not? Maybe someday. But even if we were never to do it, just use TradingView. Do your planning, and then when you execute, use the mobile app of whatever that broker is. So you benefit from zero commissions for stocks and options, okay? And in the US, most brokers would offer that option now, isn't it? Anyway, would like to join your personal class. Very nice, Pavnit. So if you don't mind, because I would extend this session for a purpose which I guess is not the right one, shoot an email to reach@tradewithufos.com, and our team will get in touch with you, sending you information about the class and how to register and all of that, okay? Yeah. Thanks, Bojan. And you know what, Mark, you have a good idea there. We have not done any session on using a mobile app version. And you know what, that's a great idea. We'll keep that into consideration. And one of these days we'll organize that, okay? Elaine, I am learning to trade during the Globex so that I sleep through emotions. That's a fantastic way to do it, okay? And a fantastic feel to wake up in the morning and see that the trade was executed according to your plan, no matter the result. I mean, if it's a profit, it's a tastier breakfast, but certainly when you see the job well done and no emotions implies the job well done, that's certainly the way to go. Anyway, everyone, again, super pleasure to be around today, to have you guys join me, and yeah, showing a little bit of my face today. So a pleasure to be here, guys. Okay, so see you soon, everyone. Keep up the good work. Really, I'm super proud and I'm super happy about everything. And as I always say, and I mean it, if you are struggling, if you need more support, if something is not working the way you need or you want, or something is taking longer than expected, speak up. Okay, don't be isolated. If you're having a trading problem, speak up. We're here to help. You can send an email. We can keep it anonymous, but maybe we give you a couple of tips. We give you a couple of exercises to be done. I don't know, depending on the problems, but maybe we can help you unlock your potential, guys. And it takes an email. Okay, so don't be isolated, guys. We're here to help. Keep that in mind. We mean it. Take care, everyone. See you soon. See you next week in the live sessions. Bye-bye.